Good morning, everyone. I'm Renato Lulia, Group Head of Investor Relations and Market Intelligence at Itaú Unibanco. Thank you for participating in our video conference to talk about our earnings for the third quarter of 2022, which are broadcasting directly from our office here on Faria Lima Avenue in São Paulo. This event will be divided into two parts. In the first part, Mr. Milton Malui Filho will explain our performance and earnings for the third quarter of 2022. Next, we'll have the Q&A session, where analysts and investors will be able to interact with us directly. Now I'd like to give some instructions for good participation in this meeting today. For those of you who are accessing this via our website, there are three options of audio on the screen: the whole content in Portuguese, the whole content in English, or the original audio. And the first two options will have simultaneous translation. To choose your option, all you have to do is click on the flag on the top left of your screen. Questions can also be forwarded via WhatsApp. To do so, all you have to do is click on the button on the screen on the website or send a message to the number +55 11 4308. The presentation we'll make today is available for download on the hot site screen and also, as usual, on our Investor Relations website. I now give the floor to Mr. Malui, who will begin the presentation on the earnings, and then I'll come back to you to moderate the Q&A session. Milton, go ahead.
Good morning, everyone. Thank you for participating in our conference on the earnings for the third quarter of 2022.
I'll go straight to the figures, and then during the presentation, I'll bring in some information that I consider relevant. So the first good news is that we posted a very robust recurring managerial result of 8.1 billion reais in the quarter, up 5.2% from the previous quarter. And in Brazil, we posted a growth of 4.8%, reaching 7.4 billion reais. Consolidated ROE of 21%, an increase of 0.2 percentage points, and in Brazil, we've been able to maintain a very high and stable profitability level of 21.6%. The consolidated loan portfolio grew 2.5%, reaching 1.1 trillion reais, and in Brazil it reached 900.3 billion reais, up 2.7% from the previous quarter. The margin with clients also posted a very positive increase in the quarter, growing 6.4% to 23.4 billion reais. I'll provide more details later on. When we look at Brazil alone, it grew 5.5%, reaching 20.6 billion reais. Speaking of delinquency, there was a very small increase in the NPL ratio of 0.1 percentage point in the consolidated figure, and when we look at Brazil alone, it grew 0.2 percentage point. I'll provide more details later on. On the capital ratio, we have good news. We were able to increase our capital base, which grew 0.6 percentage point, reaching 11.7% of core equity in the quarter, above our risk appetite. There's no good financial performance without our clients, so I decided to include a slide here to show, very briefly, what is behind the figures we deliver. There's a lot of work and dedication. There are a lot of tools. But the central message here is that we've been, for some years now, working with the Net Promoter Score concept. So we have the measurements for all products, channels, global NPS, transaction NPS, and competitiveness. We receive more than 4 million pieces of feedbacks every year. Every one is read and interpreted, and we incorporate them into our model to understand from our client's standpoint where the levers and opportunities are. We've been receiving this high volume of feedbacks, and the process already incorporates them into the interpretation of the information. So we made a commitment back in 2018 to grow 20 points by the end of 2022. In our global NPS, we consider all main segments of the bank on a straight-line basis to understand how the client has been assessing us. The good news is that we've already grown 18 points in this period. Therefore, there are 2 more points to go, and I'm confident we'll achieve our goal for 2022 by the end of the year. Therefore, we have another 7 points to grow by the end of next year, which I believe is very possible. And the expectation is to reach 25 points of increase. Therefore, we have another 7 points to grow by the end of the year, which I believe is very possible. Two more pieces of news here. 60% of our businesses are at record high levels, so this is excellent news, and we've been monitoring this every month. And more than 25% of our businesses are above what we believe is a level of excellence, that is, above 75 NPS points. Speaking of the loan portfolio, we can see a growth of 3.4% in the quarter for individuals and 4.5% for SMEs. In Brazil, we see a quarter-over-quarter growth of 2.7% and a year-over-year growth of 20.8%. Obviously, we have an explanation for each of these lines. Personal loans grew 6.8% in the quarter. I'd like to say that part of the personal loan portfolio consists of consumer credit paid in installments and the overdraft accounts themselves, but 90% of this growth took place in higher income segments, therefore with lower default rates, both in the Personalité segment and in the Uniclass segment. Another highlight regarding the loan portfolio is that we had a huge gap in payroll loans with public sector, and I've been telling you this for some time now. We always had an important share in the INSS pensioners in the private company sector, so we set the goal of increasing our share in the public sector as well. So the good news, we grew 8% in the quarter and 77% year on year. Regarding SMEs, based on the profile of our portfolio and where we've been focusing over the years, we can see that there was an increase in origination which grew 15.4% in the period. Só que 70% dessa originação se deu em clientes de faturamentos mais altos. Portanto, but 70% of this origination was in larger clients with higher revenue and therefore with lower default levels. So the portfolio grew in a very healthy way, and although we can already see a slowdown from the previous quarter, we've decided, and I've already told you this, to make adjustments throughout the cycle. Trying to understand where the opportunities are, where there's room for growth, and where necessarily we need to make origination adjustments. Very good news for financial margin with clients in the quarter. The core margin grew 1 billion reais, and the working capital another 400 million reais. So it grew 1.4 billion reais, up 6.4% from the previous quarter. Another important message is that we've been increasing our average margin quarter on quarter. In the consolidated graph here, it started at 7.4% in the third quarter of 2021 and reached 8.6% in the third quarter of 2022. And in Brazil, it went up from 8.5% to 9.4%. This growth was not only seen in the annualized margin, but also in the annualized risk-adjusted margin. So it's good news. We've been managing to grow with quality. I think that this is a very positive highlight. The next item I want to highlight is the margin with the market. There's currently a very challenging market, as you've seen, with the higher interest rates and more volatility. And even so, we've been able to consistently maintain the result over the quarters. We remind you that this year we established a capital ratio hedge, and it cost around 500 million reais per quarter, as we mentioned in the beginning of the year, when we released the 2022 guidance. The cost is very susceptible to an increase in the interest rate and to the difference between the interest rate in Brazil and international interest rates. Despite that, we performed well this quarter in Brazil with a margin with a market of 900 million reais, and we've been able to meet our expectations. We should keep in mind that we no longer have the effects of the overhead strategy. This means that the 2022 numbers compared to last year's number that included the overhead result. So we've been able to keep a good margin. I draw your attention now to the growth we had in number of lines under commissions and fees and results from insurance operations. So we recorded a fair growth in the period. Credit and debit cards increased by nearly 8%. In the asset management business, we have a drop of 11.8%, but it's crucial to draw your attention to a very important accounting criteria. We recognize on a cash basis the performance fee of the asset management business. Typically, this effect is felt in the second and fourth quarters. Therefore, it was accounted in the last quarter, and it will happen again in the fourth quarter of the year. Therefore, comparing the third quarter with the second quarter is not ideal. In the fourth quarter, if we manage to perform well in our funds, we should also recognize the performance fee. Another highlight is that the insurance business continues to grow. Here we have positive impacts on insurance operations and less positive impacts on pension plans due to portfolio hedge and deflation in the period. But what we call core insurance is growing 53% year on year. I've been telling you over and over that there was a gap in our insurance business and that we would focus on it. The fact that we've been improving our performance, I'm just delighted with this evolution. Moving forward to financial advisory and brokerage services, despite a drop in this line, we keep on trying hard. This is a harder year for equities, but the bank has a very solid performance in both fixed income and M&A. There was a slight drop due to a little less activity in the quarter. Equities have not been so good, but we've been leading all the fixed income rankings, and as you can see, we have a fair share here of 27% in origination, 33% in distribution, and 31% in ESG bond issuances. Let's just say that the DCM performance is really strong. Last but not least, let's talk about asset management. In addition to the effect of the performance fee, which I've mentioned before, it's essential to show that we keep on growing. As you can see, we have an open platform and have been working a lot on incentive models with complete independence, which allows us to grow more in open platforms than in our own products. But it all depends on the cycle, whether it's a higher or lower interest rate scenario, on our clients' investment profile, and on what investment products they are looking for. We have a lot of flexibility when it comes to meeting our clients' needs. Speaking of delinquency, I'll get started with the NPL 90 days overdue, because we have some important messages. There was a slight rise in NPL 90 days overdue in Brazil, as I told you in the beginning of the presentation. I also told you that when we were to make any sale in an active portfolio, we would make it with transparency. If you compare 3.25% to 3.29%, the difference is basically the effect we had from the active portfolio sale in the period. It was a positive economic result, and it also decreased the NPL ratio. So again, for the sake of transparency, we thought it was important to share this piece of information with you. The total 90 days overdue NPL was impacted by only 3 basis points. If it weren't for the sale of active portfolio, our NPL would have been 2.85%. Once again, the sale of active portfolio was made at a positive economic value, which is something good and healthy for the bank's balance sheet. When we talk about NPL 90 days overdue in Brazil, individuals' NPL posted a slight rise by 30 basis points. As the active portfolio sold was mostly made by individuals, the impact would be an increase of 7 basis points. And here I'll pause for a moment to talk about something that will surely come up during the Q&A session, because I'd like to address a critical point. You must remember that in the third quarter of last year, I told you that there would be a gradual normalization of the NPL ratio. This was the bank's expectation for 2022. As you can see, the normalization has been happening in a very healthy way, while still operating in lower levels than pre-crisis. We expect the NPL for individuals to get a little worse, perhaps for one more quarter. We expect the impact for next quarter to be of a similar scale to what we had this quarter. This is our best expectation for the information we have today, but of course, there's a lot of uncertainty. Things may change. We expect NPL normalization to levels similar to those we had pre-COVID in the first quarter of 2023. This is an important message. We see a slight rise of 10 basis points in NPL for SMEs. Moving to the short-term delinquency, individuals' NPL ratio for 15 to 90 days overdue rose 10 basis points, whereas for SMEs, there was a drop of 10 basis points. So we expect well-behaved short-term delinquency rates and 90 days overdue NPL to gradually normalize to levels similar to those we had pre-COVID, which is super consistent with what I've been telling you for the last 4 quarters. NPL for the large corporate segment is at really comfortable levels, 0.1%, although NPL is not exactly the best measure for monitoring delinquency in the segment. Moving to credit quality and cost of credit, the ratio renegotiated portfolio to total portfolio was flat at 3.2%. But there's an increase of 1.7 billion reais in the quarter, of which only 900 million reais correspond to NPL 90 days overdue. So we keep highly focused, renegotiating what makes sense to renegotiate. There's no purpose other than providing good service and some support to clients who really need it. However, for those clients who are regrettably far in the red, we follow our collection rules with all due care. Another important piece of information is that the coverage for NPL 90 days overdue in this portfolio is over 220%. This is a very sound coverage, which is also very positive news. The reprofiled portfolio is the one that we segregated in the beginning of the pandemic under the Travessia program, which was the program implemented to help our clients who were not overdue at that time to make it through the crisis. This reprofiled portfolio started at 53.5 billion reais, and it's now at 21.5 billion reais. So more than half of the portfolio has been amortized to this 2-year period, down 39% year-on-year and 10.8% quarter-on-quarter. 60% of this portfolio is collateralized, and duration tends to increase once the remaining unsecured amount is paid. Therefore, the amortization volume tends to drop, but with more collateralized mix and good credit quality. The cost of credit to portfolio ratio also posted a slight increase. The nominal value is up due to the portfolio growth, but we are still running at levels lower than those of the pre-pandemic period, so there's not much worth mentioning regarding this item. We reached a coverage ratio of 215%, flat or a little drop compared to the previous quarter, with fairly adequate coverage in all segments. We reached 188% coverage for individuals, and we must keep in mind that the average coverage from 2015 to 2019 was 167%. That is, we've been operating at nearly 20 percentage points above the historical average. Going forward to OPEX, I'd say this is a more challenging quarter due to the effects of the collective bargaining. The negotiated bonus was a major effect in the quarter. The 2021 salary adjustment of 10.97%, which impacted until September 2022, was based on inflation measured by INPC plus 0.5%. The broad consumer price index, so-called IPCA, was up 7.2%. General market price index, or IGPM, rose 8.2%. And we recorded a bonus effect of 80 million reais in September 2022. So OPEX increased 3.8% quarter-over-quarter and 6.9% year-over-year. Just remember that last year there was no bonus, since it was a different negotiation of collective bargaining, negotiated every 2 years. This means that we managed to run OPEX below inflation, even with the bonus impact in 2022. I'd like to show our OPEX agenda as follows. First, we compare core expenses between 9M21 and 9M22. There was a 0.9% rise, way below inflation. As a reminder, the bank's inflation is much higher because of the salary adjustment. We have in place our efficiency program, which started some time ago with positive results. Moreover, the bank keeps on growing, doing more business, and I would like to say that transaction costs may be a burden in OPEX, but this is a counterparty in increasing revenues. Our investments grew by 1.9 billion reais. There are investments in technology, in new business, and in business expansion, seeking higher efficiency, productivity, revenue generation, and cost reduction. So these investments are focused on the long term. In the end, we excluded Latin America operations. The bank has had a great performance with financial discipline and good cost management. It's true that we do not manage cost for the sake of cost. We manage the efficiency ratio. And we have the lowest ratio in the banking industry when calculated in the complete methodology. Our efficiency ratio reached 38.9% in Brazil and 41.1% in the consolidated. Last but not least, the news regarding capital is great. We managed to increase capital by 60 basis points in this quarter, with CET1 going to 11.1% from 11.7% and AT1 to 1.6%. You only have to keep in mind that the regulatory limit is 1.5%. The message here is that we still have a buffer of 10 basis points, just in case the Brazilian real appreciates, and we have to optimize our capital ratio. CET1 reached 13.2%, basically due to higher earnings, including the recognition of a provision for dividends and increase in loan portfolio. This way, we were able to finance our growth and also accumulate capital for shareholders, which is very good news too. And here I finish my presentation. These were the main messages. We feel very positive about the results of this quarter. Of course, we're aware of the challenges we face at all times and highly aware that we'll face major challenges in the future. I'll be joining Renato now for the Q&A session. Once more, thank you very much for your attendance and participation. See you in a while. Take care.
Bom, Milton acabou de chegar aqui.
Milton has just arrived, so we can start with our Q&A session. And it will be bilingual, so we will answer the question in the language of the question. And if you want translation, we have the option for English and Portuguese. You can select it. Please remember that you can submit your questions via WhatsApp. And for that, the number will be +55 11 99148 4308. Well, we have the first question now. Yes. First question now from Flavio Yoshida from Bank of America. Hello, Flavio. Hello, everyone. Well, first of all, I would like to congratulate you for the excellent work and the very good results of the bank in a scenario that is very challenging. And I would like to understand, on your opinion, profitability for the future, at least for the next year, 2023. The scenario is challenging, the visibility is low. However, most of what you've done all throughout this year will be, let's just say, you're planting so you can harvest next year. So from that dynamic, are we expecting a good result next year? And also, I wanted to understand the dynamic of the credit portfolio. What we've seen was an acceleration in the second quarter. Now, there was a bit of a deceleration year on year. And I wanted to understand, what can we expect? I know that you're still going to publish the guidance for next year, but what can you give us as a feeling for the growth of the portfolio for next year? Hello, Yoshida. Thank you for the question. Well, I think you concluded very well. Well, since it's the first question, I don't want to provide any information that is not correct, but we're still working with the scenario of 2023. We have a lot of uncertainties and a lot of points that we need to refine. We're in the final points for the issuance of the budget. And in the first call of the next year with the results of the fourth quarter, we're going to talk about these points. But the message here is a sustainable growth. That's the central core point. And that's what we've been working for over the last few quarters. There is a review of the guidance of 2022. Well, we haven't really reviewed it. Of course, there are ranges for the lines. But we understand that within this geography, we can deliver the results of the bank and reaffirm, therefore, the guidance for 2022. The expectation, therefore, is that we will see a growth that is healthy. Well, there is a small, there is a decrease in the portfolio. There is inertia for the portfolio next year. There is a way that the interest rates still impact our business and the way that the bank does the hedge of the working capital, the deposit. So there is always an integral that we have to observe. Well, there are challenges such as the investment bank, how the activities will unfold, and we have to keep an eye on this. There is challenges in the cost of credit. We're still careful in the follow-up of the risk of the bank and very cautious. The scenario inspires cautious. And linking to your first question, well, second question actually, there was a decrease in the third quarter, and we're growing nonetheless. The portfolio is growing healthily. We're getting a penetration in the lower risk clients. We are deleveraging some clients that have higher risks. We've been able to have a capillarity in clients that we have a history. Well, we are increasing the share of wallet in these groups that we have a relationship with, and we are very careful with the external challenges, especially mono products. If we have to mention two cases, the credit cards and the mono product, and here the credit card for the shareholders, well, for the clients of the bank, we have the open ocean segment where we acquire the digital clients, and also the clients where the only lever is credit, and typically you have a lower income than the average. Here we've been ultra conservative, and we reduce the concession in a material way, over 90% reduction in the period, and in the finance that have a value proposition with our partners, we've done adjustments in the concession of credit. Nonetheless, this is a quality of risk that is much well, the open ocean. You use the physical the, well, you do the charging, and this is the what we've been following up. There was a decrease, and I can see that for the next year, if we anticipate the guidance, we're going to see a portfolio that is going to grow less than it's been growing in 2022. We just have to see that this is a portfolio that has been added over the last quarter, and since there is a reduction in the base effect, we're going to see a reduction in the portfolio as a whole. And the central point here is to look at our business. When we look at the cost of credit, we are a universal, robust bank where we are very relevant in all these segments, and where we are working, and this balance of the portfolio allows us to be able to navigate in a very consistent way throughout the very difficult period. There are some important compensations in the portfolios of the bank, and also an upscale affluent profile that allows us to have results of credit that are very adequate. And now we go back to what we've observed in the pre-pandemic. Thank you, Milton. We have now the next question from Thiago Batista from UBS. The floor is yours. Hello, Milton, Renato. Congratulations for the result, very strong. Quality, good portfolio. My question is about margin for your customers, and here I'm focusing in sensitive operations to spread. If we look at the rate of spread of this spread, we are seeing a growth quarter on quarter, but still much lower than what was pre-COVID. Pre-COVID was, now it's 8%. It was higher. Now, can we imagine that that margin will converge because it was pre-COVID or not? The change in mix was so large, the mix of customers, clients, and products was so changed. Why don't we come back to those levels then? And the other alternative is the margin post-revision. That is 100 and 200 bips below to the pre-COVID. So it's 5.6, it's close to 7. Can we imagine that the margin is the stiffening or the pre-provision will go back to the levels of the pre-COVID? That's the point. Okay. Hi, Thiago. Thank you very much for your question and for analyzing the results. Well, first of all, things are much more different than the pre-COVID. A few of the information that is key that we have to pay attention to the evolution of the margin. The first thing, our guaranteed portfolio has grown 5 percentage points, increased the capillarity of 5 percentage points. And of course, that brings a mix to an accounting less risky, but with less margin, of course. And there is an effect at the beginning of COVID, which was the cap of the regulatory cap that had an impact in the profitability of the profits of the products. We had the risk lines that dropped, and the portfolio that was growing, and that had an effect on the margin. Well, there is a mix between guaranteed and non-guaranteed. It changed. That's an important information. For example, bank overdrafts. So look, our wholesale portfolio, if we just go back 3 years, it's something that grew 55%. If you go back 3 years down in the past, it's a portfolio that that is very horizontal. So if you have more wholesale, less well, we have more guaranteed and less clean. That's the second phenomenon that has an impact on the margin. And the third aspect, and this is very relevant for the period, is that we've seen an interest rate increase until the 1375. The speed has been very high, and there are some products that are impacted. And in the flow, we've really increased the rates, but in the portfolio, there is more impact when you compare retail and wholesale. So, you have the overdraft, it has a cap, the real estate in the map 4, we have a dynamic of spread post fixed. So on one side, you are benefiting from the benefit of the savings account, and on the other hand, you have an impact in the credit, and you have the two effects. You leave the spread in the credit and the liabilities in a different line. So there are several other effects. My vision is that we should not go back to what we had in margins in the pre-pandemic. We are still seeing our margin stabilizing with maybe a bit of an expansion, but stabilizing above the levels that we are seeing here. This is our best estimation thus far. Thank you, Milton. Third question, online, Gustavo Schroden from Bradesco BBI. Hello.
Bom dia, Milton.
Good morning, Milton. Good morning, Renato. Thank you for the opportunity. Congratulations on the results. Very strong. I'm going to ask you questions. The first one is asset quality. I don't know if the correct wording is appetite for risk. I'm going to use that phrase for lack of a better one. Well, we see delinquency and the individuals is growing. There are some different dynamics between the players. In fact, it has been growing for everyone. My question, Milton, is regarding, well, not trying to predict the future if the NPL will stabilize on the next quarter or in the first quarter of 23. But up until what do you believe that we can maintain, let's just say, that appetite for risk in those riskier lines? How much do you accept of deterioration in the NPL so we can continue still going along with this rhythm? We see a deceleration in the growth, specifically credit cards. It's growing, but there is a deceleration. Also, vehicles, well, cars, financing. Well, what is your limit, really, looking at deterioration? I'm not even thinking about if we stop at this quarter, next year, we're going to start, you're going to stop. It's very difficult to estimate, but I wanted to understand your risk appetite in those lines. And the second question is quicker. It's about dividends. I think that the capital is replenishing itself. There is a level of ROE 2021 with a dividend of 25%. The trend really is to exclude effects, extraordinary effects. The trend is the capital to go back. So do you think that the dividends are going to go back to 40% next year? Well, Gustavo, thank you. It's a pleasure to see you once again. Thank you for the comments about our results. Let me address delinquency and individuals, natural persons, pessoa física in Portuguese. Well, we have to understand the complete portfolio. Well, our operation for individuals is very diverse. We have the account holder and all the segments that we have, the Uniclass personality, all the products. We have our operations, monoliners, credit, real estate, we have vehicles, and we have the operation of credit cards. The two portfolios that feel like to say the cycles that we're observing with the increase of inflation is a portfolio of credit cards, open ocean, as we've talked, and our appetite is to create value. So our appetite hasn't changed. It's dynamic. It depends on the conditions of what we see on the perspective scenario, what we are observing. The reality, the results of these crops, let's just say. So we've had very relevant adjustment in concession. We reduced rigorously the concession in certain products, credit cards, open ocean is one of them. Vehicles, we've done, as you commented, the portfolio of vehicles at the margin, the total portfolio is reducing, and that shows that we've been able to adjust to the necessary adjustments. And now the important is that we are always the exposed, the X before, and then we retrofeed this model. These this is within our appetite. You have the vehicles, it's already fitted. So the credit card is more volatile. We're doing a very active management of the portfolio, very intense, but the portfolio is very relevant, as you know, and it is subject to more volatility. But we've been able to absorb this in this period. All the account holders, given the profile of our client, the capacity to capillarity in our relationship, 2/3 are clients that are engaged. So we have a credit performance that is very solid during this period. Therefore, since the portfolio of account holder is very diverse, the individual is very, we have compensation. Some are more pressured, some are less pressured. If we look at the future, there will not be a review of the appetite in terms of expanding with more lines of risk unless we have clients that we have records, that we have a good relationship, and we have a good capillarity of credit. So what we've been able to do is increase the share of wallet in those clients, increase the value proposition, improving the relationship, and that allows us to grow with quality. That's the central message. Well, the harvests, the crops are fitted. The adjustments have been done in a relevant way. And when we look at companies, we have to do the breakdown in two worlds. We have wholesales and retails. We have the middle market above 50 million, and then we have the ultra large, the biggest corporations of Brazil. Their clients. When we look at the wholesale, the performance is extraordinary. We've really with grown with control costs. We had the capillarity with our clients. We have a very solid value proposition, and the cost of credit is changed. Well, we have the middle here companies, but this is for the wholesale because we operate with a profile of the retail, where we have the small companies, but our mix is a bit more upscale from the invoicing, and they have a better quality for the retail. When we go to middle, this is not different. The story is not different. We've been growing with a lot of quality, with a cost of credit that is very well behaved, and a fine and a margin, net margin that is very healthy. As we see how we're managing the bank, we're not just looking at top line. We refeed our models as we bring new observations and new elements, and we're always looking at profitability, always looking at that. Our mantra for the creation of value, the return on allocated assets, this is the main driver for the decision-making process. Even though we have appetite policies for credit that are very well defined, in margin, we are always pricing well, and we are making the operations run as quickly as we can in the best way possible, not only being able to look at the past, but also doing an estimation of the future performance of our bank. So that's how we manage. We've done relevant decreases, and we're growing with quality and expanding as possible our financial margin with our clients as the portfolio grows. Dividends, sorry, question number 2. Before we give the floor to Rafael. About dividends, the question is very objective. Our policy for dividends, you know that table that was published? When we said there is on the one hand that matrix, the APR, the assets that are ponderated by risk, and on the other hand the profitability. Our appetite for risk for the set one has reduced to 11.5. It was 12, and we had to reduce at the board, and now we are talking about 13 percentage points on capital one. So this is our appetite for the table of dividends. We're still observing the 13.5. This second point. When we go to an excess of capital, we are always observing prospectively and not looking to the past, our real capacity to be able to grow and invest. Not only growing the portfolio, we're doing new investments, acquisitions. We have opportunities that are coming up. So in the past, we used to operate with a payout, with a quarter with a payout that was very high, because there was an excess of capital in the bank that was very high, and we didn't see the perspective of the use of that capital. That's why we created the policy for the profit sharing, and the payout was very high. Now we don't see the payout increasing. We're still working at 25% for 2 reasons. We are doing a catching up in the capital. If you look at the last 2 years, we've really replenished the main capital of the bank. We are above the appetite. We have challenges up for the future positive. and challenges nonetheless. In the same way that we have a change in Basilea that can risk of credit, there are benefits, there are operational risk, there are some public bids, there are some transactions that we are working with the regulator that consume the capital, there are intangibles that go against the capital, and we are still investing in the bank. So really, looking at the reasonable horizon, at least the next 12 months, we do not see any sense in increasing the payout. What we are doing, yes, and we've been able to do with predictability and consistency is increase the profit and the payout. The information is that we're working with 25. Any changes, looking at the future for any scenario, if we do not understand that the bank has the capacity to have an adequate profitability, the capital of the shareholders, then we're going to increase the distribution, certainly. Now, Milton, we are going to go Rafael. Yes. Sorry for the false start. Now it's your turn. Well, I think that I was going to have to ask the answer about your dividends, your policy of dividends. No. Well, good morning, everyone. Congratulations on the results. There are two questions here. I think that Milton has commented on that. On the previous event, even on the over offering, maybe there is an over offering of credit cards in the open ocean. Well, you've commented really on that issuance. Could you give us a readout on what you understand that happened in the market, specifically in that segment, that there was an excess of offering? And the second question, still, well, not trying to get a guidance, but just to understand your dynamic of delinquency. I mean, Milton already mentioned that if everything else is constant, maybe delinquency will be stabilized in the first quarter. Well, what are your expenses with provision? I imagine that the expenses with provision are going to go to the fourth quarter. Would it be reasonable that it is a percentage of the portfolio? Would it be maintained in the same levels from the fourth quarter? So there is a stability, and then the provision for the percentage of the portfolio would have a trend in the evolution in the same rhythm, let's just say, or there would be any variations. How do you see this? Hi, Rafael, thank you for the question. Thank you for your initial comments. Now, let's talk about the open ocean and the credit cards. Now, we always talk about the benefits of competition, more players, more digital players, more competition. Certainly that brings benefit. The client is benefited, the experience changes, and that makes the bank having to reinvent ourselves every day so we can deliver a better value proposition experience for their clients. Now, if you add a series of effects, and I'm talking about regulatory effects, and I'm talking about the whole scenario issues. Well, we have the lower interest rates and negative in some places, the phenomena of the abundant capital for fintechs and new companies that are growing. And the greatest driver, it was growth. We always heard about the growth, the base, those were the drivers. And now what happened? A lot of these players started their operations based on credit cards. That was their main product, or maybe the only product at the time. So at that time, the investor said, grow fast, increase your base of clients, and reduce your acquisition cost. Many of them had journeys that were incredible for the clients, but they are growing with a lot of effort. The second aspect is that the growth was given in an unbalanced way. Unbalanced. What do I want to say about that? Their products, they don't have any fees. They're free with a digital experience that is very good. And that generates an imbalance, economic imbalance between the client and the organization. So first point, today is very easy, and it was very easy. Any client would acquire a product of credit card. So whether it would be through the digital channels and the fact that they didn't have to pay any annuity, any fee. So they can have 7 credit cards issued in one day, and that was very easy. The second element, since there is no cost, you get a credit card in your pocket and you leave it there until you need it. Third, that we observe in the open ocean, the behavior of the client is a customer that generates the sudden death. Well, it has a mono product with you, relationship, only uses you with that credit card until they have the difficulty of paying for the product. And then what they do, they get it in the drawer and then they go to the next. So the main engagement is key in that relationship, to be the main engager. That's the core issue. The third element is that when you create it, something that is artificial. In the tariff for the interchange of the prepaid, several businesses had a revenue that was artificial, that was asymmetric, it was artificial, and that made the profits and liabilities of the business model. Now we have more interest rates, so the main vaccine for that excess is interest rate, and it's coming up all throughout the world. The investors, they have less appetite. So the correction for the market value of many of these companies happens now, and the value of these companies drops, and the investors are expecting profitability. For them to get profitability, you have to get levers of monetization, and you have to have a risk and credit appetite that is adequate. When you operate in a very low income public, the main lever is credit. They don't have pockets. These clients don't have the pockets to have other relationships with you. So it's very difficult in a scenario such as the one that we are observing, increase in inflation, interest rates, and all the effects that we've been seeing. It's very difficult for this client to be able, but well, their bargaining price has been corroded. They don't have purchasing power. They have difficulty sometimes paying their obligations. So yes, there was an over offering. There was a capital asymmetry that was relevant. The banks consider the capital levels to operate with this public, it was much higher than the fintechs. I believe in proportionality. I think that we need to classify by size, and the central bank has done that recently here in Brazil, but it's still not implemented. There's still a phase in of that change. The rate of the interchange, also the exchange generated that many of the clients, well, the business model was based just mainly on that tariff that was more than the double than the regulatory cap of the central bank defined by the central bank by the MDR of debit. So we generated that effect that was very relevant, that very important effect. So part of what we are seeing of delinquency has to do with the over offering. The client is levered, they have less financial education, maybe less capacity for the decision-making process up until when they can go with their indebtedness, and the indebtedness of the families has increased. And when we stratify the space, we can see that the growth of low income was two products, credit card and personal credit. And personal credit, it becomes a lever for you to remove the client from the credit card and give them deadline so they can pay. So it's a renegotiation that is forced. So you can remove the client from one product and then getting them to the personal credit portfolio. So this is a portfolio that grew on the market, but part of the delinquency will be up there with the time in the future, because you have to look at the dynamic as a whole. But I think that there was a very, very large, there was too much access here. So the corrections happen, and it takes time. It takes time to digest, and it takes time to do the adjustment and this harvest in such a way that you will affect the growth of the portfolio on time. And about the cost of credit, if you look up ahead, we still think that there was a small expansion in the indicator. I'm not anticipating any guidance. Look, but we still believe that they're going to stabilize in levels that was lower than the pre-pandemic. When we look at the fourth quarter of 19, around that, we were running 3.2 of the credit index. We believe that it will be, the relationship should be going slowly towards these thresholds. But once again, there is a lot of uncertainties. There is a lot of things that were not defined, and we're going to follow up. And at the beginning of the year, we're going to have more surety to give a guidance that is more robust line per line of the bank. Very good. Let's go to the next question. We have a long list of questions today. Next one, Renato Meloni. He is on screen. Hello, everyone. Hello, congratulations on your results. Can you expand a little bit more on the adjustments that you're doing with the credit concession? For example, how much did you do on the cutoff on the limits? Well, how much the drop in approvals? Also, well, with these reductions, are you going to continue next year, or are you at the correct level for the scenario nowadays? Renato, First of all, I think that the adjustments that were necessary was already done. Oh, of course, there is always a space on the margin, and this is a dynamic agenda. If we are in a calmer scenario, then we can do adjustments. We can look at the history, how the model is performing, and there is always a perspective vision. Remember, we've been working with our models, not only that look at the expectation of the bet rate of this client with time, but also what is the macro perspective. So there is a macro variable. And the cutoffs, well, on OpenOcean was very relevant, but not only per channel. We did really adjustments that are relevant in lower incomes. These are the incomes that are impacted, the people that are impacted more in this process. So that was a decision that was made for a long time. We've been managing this shearing. There was a reduction in 10 percentage points in the period. Our share with this public, just to give you the relevance of the adjustment that we've done. And we grew in publics that have a risk level that is better, given the income that are suffering less in the cycle. So there is the guaranteed products. So we have the guaranteed products, and we've increased them 5 percentage points in their capillarity of these products in the portfolio as a whole. For the things that we're analyzing, and based on the information that is available, the adjustments that were done, if we look at the future, there can always be an adjustment, additional adjustment, but the big shearing already happened. If you look at vehicles, the cuts in production very relevant, and credit card, we cut 90% of 90% of OpenOcean, 90% gives you a dimension of the size of the adjustment, whatever the volume, 90% of adjustment shows how much we're seeing these harvests with more volatility, and they are not connected to our appetite. And the central point is that we're quick and dynamic. We interpret the data, we have the deviation, we work surgically, and our models allow for this.
For next question, Milton, let's flip the switch to English, because the next question comes from Tito Labarta from Goldman Sachs. Hey, Tito, good to see you. Thanks for joining.
Olá, Renato. Não puedo falar português?
Pode, claro que pode.
Sure, you can speak Portuguese.
It would be easier. How are you? Great. Thanks for the call and taking my question. My question, a little bit on the capital, but more specifically, given the macro and political environments, right? You mentioned, I think, core tier 1, 11.5%, 12%, right? You're right around there, good improvements this quarter. Just given the scenario that we're going into, do you feel that you would need to hold maybe more capital, right? I mean, asset quality is deteriorating, some uncertainty on the fiscal situation in Brazil. I don't know, what you've heard on potential movements from the government. I mean, just what we've heard is like increased use of public sector banks, potentially renegotiating some debts. So any color you can provide on what you're hearing from government potential programs, and would that make you more cautious to want to hold more capital?
Okay, Tito, thank you very much. So I'll answer in English to respect the language of your question.
Obrigado.
So, obrigado você. So the topic is just going back when we define our risk appetite and the levels of tier 1 that we were expecting for the bank. We were saying about 13.5, and this is what we use for the dividend policy of the bank. At that time, if you remember, the largest or the biggest impact that we could have in our capital base was related to the FX devaluation, real devaluation. And why was that? That was because we have a huge portfolio, not only in Brazil, in other currencies, but also the banks that we have abroad, especially in Latin America. So you have to take this in consideration. From that time, when we look today, there is a second huge impact that was due to the FX devaluation. It was the overhedge strategy of the bank, that whenever we had a real depreciation, it would generate tax credit, and this would have a huge impact in our capital base. So there is no more overhedge, so there is no revenues, but there is no risk for capital. And second, I think successfully we implemented by December of last year, when we announced that we were implementing the hedge of our capital index. That means that there is a cost, this 400, 500 million reais per quarter, but when we look at full year, there is no volatility due to the FX. So even though we had some appreciation at the beginning of the year, we are seeing some devaluation, and our effectiveness of the hedge has been perfect. So that is very good news. That means that the buffers that we had for this type of volatility, now we can replace with other uncertainties that we might have in the future. So we are very comfortable, and we do a stress test in our balance sheet all the time, and we have these discussions, and we see that we have a very comfortable capital base and that our appetite is pretty well defined with 11.5 of CET1, CT1, and also 1.5 of additional Tier 1. So we are confident with that. I think we have a comfortable buffer. We don't have the FX risk anymore. We should be increasing our capital. There are some positives and negatives, as I was saying just a few minutes ago. We have for credit Basel changes, maybe have some positive impact in our capital. We have the operational risk that will impact the bank, but this won't be in 2023, should be in 2024. We have some approvals that are still pending, investing or buying some companies. So at the end of the day, we're still comfortable. We feel that we have the capability to keep growing capital, but still with a good buffer from far away from the regulatory requirement that can lead us to uncertainties and changes in macro policies. We think it's still early to say what's going to happen, and although we see the market very volatile, yesterday was a good example of that, but it's still in the mood of expecting new flows to understand what are the risks that we are seeing looking forward. But we have a very comfortable capital base, and we are very fine with that.
Thanks, Milton. And the next question comes from Jason Molly. Jason, I'm never sure in which language you're going to ask your question, but I'll leave that up to you. Good to see you.
Yeah, Milton, Renato, y todos. I'll ask my one question as requested, and I'll do it in English since you have everything set up to do that. Well, first, I'd like to repeat the congratulations on the solid results. Itaú Unibanco is living up to the very high standards in a challenging environment, in my opinion. Most of my questions on operational performance have been addressed. So let me ask this. In the management commentary report, you started with the statement that Itaú Unibanco's digital and cultural transformation agenda continues to evolve. And you have provided strong digital metrics and customer satisfaction through NPS. But if you can provide a recap and an update on how the cultural transformation is evolving, have there been challenges, and how have you been facing them? I think it really differentiates Itaú Unibanco.
Great. Good to see you, Jason. Thank you for the compliments. It's a pleasure to have you here with us. So I think someone the other day was asking me how many of my time I spend with the cultural transformation. And I answered 120%. And why is that? Because cultural transformation is something that comes top down, and we have to do that every single day, okay? Every single decision, every single promotion, every single discussion, every single moment, you need to walk the talk, the new culture. So the thing is that last year we worked very deep in defining the territories of this new culture, and we had discussions internally with many people from the bank, and I would say that 90% of our employees, more than 4,000 people in this survey, said that they would expect a relevant cultural transformation, okay? And this was just to let you know that we still have a very fertile ground to invest. So then we started to discuss in the executive committee with the board of directors, saying what are the possible movements that we can do. And we were bold at the end of the day. We really think that we have a lot of good things of our culture that never change. The ethical thing, client thing, profitability, performance, sustainable performance are things that won't change in the coming years, but we still have to modify relevant things in our culture. So we did that. We've been working a lot of workshops, internal workshops. We've been discussing with all the managers since the executive committee. Just to let you know, I was part of 4 workshops with the executive committee where we had very, very deep discussions about the new culture, because we have to keep in mind that the change begins in ourselves. Before saying that people should do this way or that way, we have to be sure that we are doing the right way. And this is the discussions we've been having the executive committee to guarantee that we are the role model. The partners of the bank are the role model. The directors of the bank are the role model. But they have to be trained. We have to be trained. We have to be very open-minded to understand that things are changing and we have to do things in a different way. So this is basically the way we've been working. We've been having many, many workshops. We have teams dedicated to the cultural transformation. And I think if you ask me, how can I measure culture? It's not only by the workshops or the reaction or the capability of doing things. We had major change in the bank. So there is no title anymore. I always say that it's not a irrelevant information. It's a very relevant. We only have directors. We don't have director, executive vice president. We are all directors. Now, this gives us a lot of flexibility when we have to move people because we give them a mandate, we give them an objective, we give him a goal, and that's all. And there is a compensation discussion. There is nothing else. We increased our partnership program. We used to have 2 levels, the holding partner, and also we have the associate. We don't have those names anymore. We have partners, and all of them are partners. We have 450 positions of partners inside the bank coming from 195, so more than twice the size we had a year ago. We don't have one layer, the executive layer that we used to have, we don't have anymore. So there is much more autonomy, much more accountability, much more speed. Agility is something that we take a lot in consideration. But never forgetting what brought us here. The ethical, the risk capability of managing the bank, the performance and sustainable performance in the long term, and the client, it's something that we are always upgrading. So this is the agenda that we upgraded. And also the way we are working, the method, it's relevant for the new culture. So if you have the digital transformation where we are very advanced, if you have the way of working changed in a more agility way, and if you have the right culture, where are the results? The NPS. So at the end of the day, the client should be more satisfied. So the way I measure cultural transformation, it's in the eNPS, the Employer Net Promoter Score. Just to give you a number, we reached 83 points in the eNPS. We won in Brazil the first company in the Great Place to Work, not only on financial system, but also looking at companies all over. So #1 in Great Place to Work. This is a very good feedback that we receive from our team. But the most relevant one, at the end of the day, if you have happy people, you should have happy clients if you are working in the right direction. And the NPS of the bank, NPS, has been achieving its maximum when we look the historical range. So we are very positive that we are in the right way, right pace, moving forward, but still challenges. You don't change, you don't sheeps and wolves in 2 or 3 months. We have to do that as time comes by. We are moving forward, and also we are bringing new culture to the bank all the time. So we have to work and be very open-minded that we don't know everything. We have to take the competition very serious, that we have to look to the market, understand what they are doing, what you can do better, and you need to bring good people to the bank. So this is the process that we are going towards, and we are very happy with the evolution so far. But in the other hand, I would say that we are 15 or 20% of the journey. So we still have a lot of work to do in that front.
Obrigado, Milton. Obrigado, Jason.
Thank you, Milton. Thank you, Jason. And now the next question. We have Rosnan from BTG Pactual. Hello. Pleasure to talk to you guys. Hello, Milton. I have a very quick question for you. I think that a lot of investors are surprised with the difference of the results of Itaú for their private partner, well, the other ones, Santander and Bradesco. Well, you talk about the cultural transformation. Since you took on since CEO, well, if we had to look at the difference in performance to your peers, how much do you think can be explained by more cyclical issues? It depends on the cycle of the client that the bank operates, the high profit, the more the companies and the individuals that have more money. How much can that explain the transformation? Maybe
Eu não estou esperando
maybe that would be the structural thing. I'm not trying to get a number, but I wanted you to give us a guidance. How much can we see? And if that thing that you're seeing will continue, and that will mean a gap in the return for Itaú in comparison to its peers. Hello, Rosman. Thank you for the question. I want to do a statement before I answer. First, I have an enormous respect for our competition, enormous. So as I've always said, Itaú is what it is because Bradesco exists, because Santander exists, because Banco do Brasil exists. All of our competition has an enormous value. They've done incredible things all throughout the years, and these are long-term journeys. We cannot just look at 1 quarter, 1 year. We have to look at the long term. That's the first statement. Second statement that I want to give you. Maybe I should talk more about the bank itself. I don't want to do relative comparisons. I believe that you have data information capabilities to get your own conclusions. I want to talk about why I believe that we are having a performance that is sustainable, predictable, and quality based. There is no single answer. I cannot attribute all this exclusively to one element or the other. There's a series of factors. There are factors from the long term, from the external factors, internal factors. I'm going to try and talk about the strength of the bank. First of all, the fact that we are in a universal bank, strong, that plays a role in the quality of our results. What do I mean by that? If you look at all the businesses that we're investing, that we have a competition, we have had a highlighted performance. We have really wholesale participation that is relevant in Latin America. We've done a great catch up. That is great. When we look at wholesale, and I apologize before it was retail. Well, wholesale, we have credit, we have in the agribusiness, in the cash services product, the distribution sales. We've had performances that are, well, in the investment bank, if you just look at the ranking and you follow up that closely, we can fight for the leadership in all the rankings, whether if it's fixed income, variable income, M&As. These are not decisions that were taken just now. We've been working with these franchises for many, many years. Since Itaú BBA, its inception in 2013, and we really focused there on wholesale, we see an evolution that is consistent, that is constant with our operation. Back in 2005, we did an investment in the investment bank, and now we're getting the fruits of that investment. It's evident that it has to do with the human capital, it has to do with the culture, it has to do with our vision of the client. But we're getting the fruits of long-term structural decision-making process. The bank is an evolution, 98 years of story, and the bank has always evolved and has been able to reinvent itself in times of need and shorter cycles as well. So there is a structural issue here at hand. Second point. When we look at the profitability, we see that our wholesale bank, we have to really mention that. I'm talking about the Latin America operation. Treasury has a very important role in that. When I talk about Treasury global markets, I'm not talking exclusively of the trading table. That also is important, of course. The bank has been navigating very well in the face of adverse scenarios. So let's look at the interest rate. And we're still delivering results that are healthy in the March, whether if it's the dynamic banking hedge of positions that choose in the time of the hedge, you can be more directional in one position or the other. Trading is doing very well. Banking is very well, regardless of the challenges of the increase in the interest rate. The RAR of those positions is more pressured. We had levers last year that we don't have this year, for example, the overhead. So when you look at our asset base, we've had a fantastic year. Performance, fees that were very strong, and I just mentioned the accounting effect of the second quarter, fourth quarter. We talk about the quality and the capacity to manage that we've had. Our private, it's a market leader, and we're still growing with quality. NPS at the record high. We've had happier customers, more satisfied customers, and this is a virtuous cycle that we can increase profitability of the bank as a whole. So I would say that there isn't just one answer. The cultural transformation is evident that it helps. Digital transformation is a necessary condition. It's not sufficient. It's not enough to do the digital transformation if you don't have the right culture, if you don't understand the client in the correct way, if you don't have the agility and the capacity to react to the needs. When we look at the wholesale world and we look at all the businesses, we had historical max, and retail is also an operation that is very complete. So we look at all the businesses. The really retail bank is doing very well. That has to do with the quality of the team. That has to do with the quality of the decision-making process, with the transformation that the bank has done, anticipating to movement. We're talking about the digitalization as well that we've done. So really retail that is doing very well. Individuals doing well at retail, the insurance business, that for us was a theme. It was a gap. It was a gap. Now we are still focusing. The insurance business is growing in a very relevant way. Our expectation is to double this business in a reasonable horizon of time, double from what we observed last year. And we are going at the adequate rhythm for this. Monoliners are growing with quality adjustments. Recent adjustments have been done where we're talking about vehicle or other portfolio's. Retail is growing, real estate is growing, and credit card business is important for the bank. And this is a volatile portfolio. We cannot crucify the portfolio because we're seeing the acute cycles in the past, and that happens. So if I have to give you an answer, it's a set of factors. And I believe that the fact that we are universal, robust bank with competitiveness and leadership that we've achieved, that brings a great responsibility, and that a vision of the client that is very strong has allowed us to navigate very well the challenging scenarios.
Milton, we're going to switch back to English again because we have Jorge Curi from Morgan Stanley with us. Hi, Jorge. Thanks for joining. Good to see you.
Thank you. Hi, everyone, and congrats also on the great results. My question is on operating efficiency. I think you've said little about it, and I think you've done a lot on it. And I think that's a big part of what has driven your results to be so resilient. So you've gone from 3.7% expenses to assets 5 years ago to 2.7% today. And I'm looking at expenses to assets just to clean out the volatility of the net interest margin with the volatility in rates. If you want to think about it on a cost income ratio, you're at 40. How much more can you do? When you think about the next 3 years, the next 5 years, could we see another full percentage point come out of expenses to assets over the next 5 years? Can you run the bank with 1.7% cost to assets? Can you run the bank with 30% cost to income ratio? And what is needed to get you there?
Okay, Jorge, thank you very much for your comments. As we say, we like to under-promise, over-deliver. So I think in efficiency, we've been doing that for a while now. My view is that, as the name say, or the definition say, it's an efficiency ratio. So we look for cost, but we look to revenues as well. So it depends a lot on the scenario. We are in a very favorite moment now. If you see, we're in the lowest level when we look this year, finding the lower level of efficiency ratio. So there is a lot of operational leverage that we can do, as you can see when you look and compare to our assets. We can grow the bank and we can keep the costs under control. The other point that I would like to highlight is that we are not we are investing a lot in the future of the bank. So for costs, it's very easy if you want to take a only cost approach that you make wrong decisions and you decide not to invest in your franchise, not to grow the businesses, not to sell products. And you can do that. You have a much better cost ratio by the next quarter, but you won't have a strong franchise in the long term. So our decisions here are long-term based. Even if we have to invest, we're going to do it because this is the way we keep growing the bank, keep expanding the businesses that we do, that we have. So my view is that still have room to keep doing the efficiency agenda. We are always discussing that. Costs you have to do every single day. This is part of our strategic agenda, and we are focused on that. We are very focused on that. So my view is that still have room to increase. We are doing investments, as you know, but the most relevant thing is that the level of efficiency ratio that we have nowadays, I think it's international benchmark for global banks like ourselves. So we are very happy, but not satisfied. So I think we did good up to now, but still have room to do more. And it will depend in many decisions that will be taken in the coming quarters. It depends on the scenario. It depends on the capability in the revenues that we are able to generate, more pressure, less pressure. So there's a lot of things to do. I cannot give you one number saying that we can go 1 point more or a full 100 basis point, but I can tell you that's still room to do more. And I think the core cost that we say that we grew 0.9% in the quarter is the sense that we are doing good and we are doing much below inflation, okay? We'll keep investing in the bank, and we'll keep delivering low costs on the core costs. This is the mantra, this is the agenda.
Thank you.
Thank you very much, Jorge. Good to see you.
Milton, português de novo agora, e temos aqui com a gente.
Now we go back to Portuguese, and we have Mateus Amaral from Banco Inter.
Oi, pessoal, bom dia. Primeiramente,
hello, everyone. Congratulations on the results. My question is regarding credit card. You have demonstrated an increase in the overdraft fees, and I wanted to understand what is the level that is healthy for this rate. Is there any action plan for reducing the delinquency? Hi, Mateus. Thank you for being with us once again. In fact, during the pandemic period, we cannot just look at a snapshot. We have to look at the picture, the whole picture. With the lockdown, less expenses, less people purchasing stuff, and we have more payment and less expenses in the credit card fees. So our portfolio dropped in the credit card preponderantly. And remember that 126 billion of portfolio, we have 102 billion is without the interest rate. So 26 billion is the interest rate portfolio. So yes, we saw a reduction during the period of pandemic where people were spending less, and of course with more delinquency in some portfolios. We've seen delinquency higher in the open ocean. Before the client goes delinquent, they go through the interest rate. They go for paying by installments, and then they do the agreement. So part of the delinquency goes through that previous step. Yes, we've done a series of actions. Reduction in the margin, there is a portfolio that is installed, but the bank has the capacity to be very active in the management of the limits of our clients, whether they have the benefits of the capital, and those clients also that are given signs for difficulty is part of the active management of the bank to communicate with quality and to do the necessary adjustments. There are several initiatives. Adjustment in the crops, the concession, the structural limits adjustment, and to try and understand up until when these portfolios. So when I'm talking about the projections in the individuals, natural persons, did increase, the big offender was the credit card business. So when I say that we're expecting a stabilization with the information nowadays, it's that portfolio has a tendency to stabilize, and we're working strongly for this. This is contained within the individual's universe, natural person universe. Thank you, Mateus. Next question. We have Enrique Navarro from Santander. Hello. Thank you for your presence. Hi, everyone. Well, congratulations on the result. My question is regarding the coverage index. If we imagine that you have 215, something like that, imagine 2023, the risk of the portfolio should be lower. A corporate portfolio. So if you think about your records, that is something closer to 200%. Imagine that also we consider the way that you provision. The provision criteria, you do it a bit before, and then you can revert that provision down the line. And then imagine 2023, the regulatory risk, the taxes over dividends, and even the increase in taxes where the bank is more interested in the income. So considering these profits, these hypotheses, can we work with 200, so a reduction in the coverage index for the year of 23? And those assumptions that I mentioned, some of them do not make sense. I mean, if they don't make sense, can you comment? Yes, Enrique, thank you for this opportunity. Thank you for the compliments. Well, I think it's reasonable to think about a certain stabilization all throughout time. 200% ballpark. I mean, we don't have a goal, we don't have an objective. We do not manage the bank through a coverage level. Since we are operating with an expected loss, we're always anticipating through the models. The coverage index is a consequence of the decision-making process. But this is a great indicator. So I think that yes, the bank should remain with the coverage index that is reasonable all throughout this period. When I look at retail, yes, we are consuming coverage, but still above the thresholds of 15 to 19. We're still operating 20 percentage base points above what we are operating in a period of 15-19, which is great news. So we're keeping a portfolio that is well covered. And there is an element in that portfolio that has to be taken into consideration with a lot of care, which is really the wholesale portfolio. This is an events portfolio. What do I mean by events? The coverage index doesn't necessarily, it's not an excellent metric for the wholesale portfolio. I like the coverage of provisions over the total portfolio. There are different onlooks that we can take. So any event of anything that is already provisioned by expected loss that we already have, expected liability that is anticipated, it takes on the coverage. So that's why we need to separate. We have to look at wholesale isolatedly. There is going to be volatility in retail. So before you have a delinquency, before that you have restructuring. When we have delinquency, it's because of a stress situation that is much stronger, and then the client will take the provision with him. So it's reasonable to expect that we have good coverage levels. There are some challenges up for the future. So I would say that the bank is well protected. We've been able to navigate with some buffer and our relationship with coverage against provisions, regulatory provisions will give you, if you look at that, will give you a good idea on the protection of the balance sheet. And this is reflected on how we mark those coverages per segment. And this is reflected in the coverage index of the bank. I'm not going to give you a number because we do not project it that way, but I think it's reasonable to expect a certain stabilization, above all in the total coverage. In retail, there's probably going to be some usage because, as I commented, we've observed an increase in the NPLs. And remember, even though we provision above the NPL formation, you're still fighting against an indicator of 200. So anytime that you end the March and you do that, you take your indicator to a lower level, a lower threshold. Thank you, Milton. 3 more questions down the line. And now we have Marcel Teles from Credit Suisse. You're muted. I was waiting for that moment so I can. You can talk, Marcelo. Hold on.
Tá me ouvindo agora?
Agora sim.
Can you hear me now? Good. Sorry, I had an issue here with my microphone, my headset. First of all, congratulations, Milton, on the great result. Clearly, it gets Itaú at a different threshold, a different level in regards to the other banks. This is really impressive. And now, I wanted to, well, most of my questions were, of course, answered, but I wanted to ask you more about, given the fact that you are super important in the credit card markets, how do you see the growth of PIX, the transfer? How do you think that PIX can substitute? Do you see it as a threat to the credit card business, your business? We see an increase in the use of PIX or PIX here in Brazil, in the B2B and the transfers. And Milton, what is your opinion on that type of transaction, the PIX transaction? And what is Itaú doing to be able to capture part of this value chain? Thank you, Marcelo. Thank you for the question. Thank you for the comments. Okay. I, first of all, would like to say the following. we were all in on PIX. As soon as we got the discussion of PIX, if we said, if this is good for the experience, if it brings a great experience 24/7, we already didn't charge the tariff for the internal transfer inside of the bank. So the client should transfer from one account to another. They always had the freedom and it wasn't cost. It was 24/7 for the account holder of Itaú when they did a transfer for another account holder of Itaú. Remember that. PIX universalized that. So our first decision process was to get PIX in front of any product. There was an impact in the revenue, but of course, since our agenda, our culture is on the client, it's the best product. The best product is the one that is focused on the client. So that was the first decision to really focus on PIX. From then on, we've been working diligently, and we've been working with the evolution of PIX at receivables, at payment. How is it doing? What type of payment method is it dislocated? We're keeping a great market share in volume transactional that we have at the two ends, in the receivable and the payment, the orders of magnitude of 20% of market share. So I think that these are very relevant numbers given our size. So we're still looking at the packages of the accounts of the and thinking about the suitability of the clients. If they have a package of services at a certain level of offers, but they're not using it, they're not, they're not using what they hired, we're doing the adjustments. So we are getting the PIX, and so that the client is getting the great experience, the long-term vision that is centered on the client at the right price. I know that the central bank has a roadmap for the PIX and potential of products. PIX P2B is the one that grew more. The B2B still going at a different speed. Still time for evolution that can be captured, and there is evolution. We ourselves at the sandbox of the central bank, we have attempts of new initiatives, the PIX credit that somehow would substitute a 4-point model. If well done, this can be a complement for the payment method here in Brazil. So our opinion, well, it's difficult to say here today what will be the PIX and its evolution and down the line. But the fact is, any evolution for any path trailed, the bank, Itaú Bank, will have PIX as a very, very relevant. We never had from Itaú or any other bank any type of retaliation in regards to PIX. No, we've always wanted PIX to work since the inception. And PIX only worked, and it's the success that it is because of the engagement of all the banks in the system, because the level of investment in the platforms is enormous, the adjustment and the checking the saving accounts, so that interoperability only works because of that. So we are very satisfied with the advances, and if the PIX comes to certainly disrupt other business models, other methods of payment, we're going to be at the vanguard of that. This is, if it's good for the client, it's good for the bank, it's good for the long term. Perfect. Thank you, Milton.
Milton, we're going to switch back to English
Milton,
again, because we have with us Nicolas Rivas from Bank of America. Hi, Nicolas. Good to see you.
Good to see you, Renato, and thanks so much, Renato and Milton, for the chance to ask questions. So I'm going to ask on your AT1 capital on the perps. So a few weeks ago, you said you're not going to be calling the 6 1/8 in December. You said it was basically based on the economics, and I guess on the difference between the coupon reset, which should be right now about 8%, and the refinancing cost. But you can call every 6 months, and you said you're going to continue monitoring market. So my question is, if there is a certain premium in terms of coupon reset versus refinancing cost that you would be willing to pay in order to exercise that call option, where it's, for example, 50 basis points, 100 basis points, or any color on that. And then second, we have seen some Brazilian banks access the domestic market in recent years. Banco Brasil in the third quarter raised 2.3 billion reais in a private placement in AT1s in the domestic market. So there my question would be, how much do you think you could raise in the domestic market with AT1s to refinance some of the global perps? And then finally, on capital, just going back to the question that Tito Labarta asked about capital, I just want to make sure I understood correctly. If your internal targets remain 13.5% Tier 1, 12% CET1, and if you're going to be making decisions on dividends based on those targets. Thank you.
Okay, Nicolas, good to see you again. Thank you for your questions. Let me start talking about the AT1. As you said, we said to the market on a formal basis that we wouldn't be exercising the call. The difference of the repricing and the recap, looking to the prices that we should tap on market, were very relevant. It's more than 200 basis points. So it didn't make any economic sense to exercise that call. That was the decision we made. And I think we were very transparently, not only communicating before the exercise date, but also much before that. I was saying this in conferences. We were saying to investors that this would be the definition that we should move. The second thing is that there is no price that we define before saying that at this level of premium we'll be exercising the 6 months call. But I would say that 50 basis points we would discuss. But it's not automatic that we will say that if there is 50 basis points or whatever premium there is, we won't be exercising or we will be exercising. We will evaluate the alternatives that we have, not only offshore, but also local. And just to go back to your second comment, we raised Capital One locally as well. The same way Banco do Brasil, we did the same. But there is no deep, it's not a very deep market in where you can change or you can refinance the size of AT1s we have issued offshore in the local market. So we can do it up to a certain level, and it's very competitive. It was very competitive in terms of price, even swapping to US dollars. But we don't have the same size that we have to our portfolio issued abroad. So the thing is, we need to understand the size, we need to understand the price, but I would say that 50 basis points we would discuss what are the benefits of exercising. But above that, it's very difficult that we will be exercising. And for the reasonable future that we can see from now, it doesn't seem the case that in the short term we should be exercising the calls. We still have some calls to be exercised by March of next year, and the same way around, we will pursue the same strategy. And on the capital, the second comment question that you made, let me be very clear on that. Our risk appetite, defined on the board of directors of the bank, is that for CT1, we should have 11.5. That's why we are 20 basis points above, and will be 13% in the level 1. This is the risk appetite that we have defined. Okay. For dividend purpose, we are still observing the same policy that we approved and released to the market. So 13.5. Below that, we shouldn't be discussing any extra payout, even though the risk appetite of the bank is 11.5 and 1.5, 13% of level 1.
Thanks very much for that, Milton. If I can ask a follow-up. So your comment about the 50 basis points, basically what you're saying is that right now, with current rates, if you think you wouldn't be able to issue a perp below 8.5%, then you wouldn't call your global perps and issue, at least in the global market. And then, of course, the question would be the size of it.
Yeah, the thing is, we're going to be looking to the price or the yield that we have at that time. If there is 50 basis points more expensive, we will have the discussions, but again, the decision will be on an economic base. I'm not saying that if there is 50 basis, we will exercise the call. I much more say if I have to make the decision today, I wouldn't exercise the call because we discuss on an economic basis. But below that or above that, we won't be even discussing. So just to give you a good idea of, you have to compare the level of price, the repricing of the Tier 1 that we have, and compare that to a new issue premium and understand what are the premium that we have embedded. So this is the 50 basis range that I'm mentioning here.
Thanks very much.
Obrigado, Milton. Já estamos aqui chegando no final.
Well, thank you. We're getting towards the end. And for the last question, I'm going to ask you, because it's via WhatsApp, is from Rafael, Banco do Brasil. He couldn't connect. I'm going to read. Well, we perceive a deceleration in the business of issuance of the credit cards through the bank's presentation. In parallel, the whole industry has seen a raise in delinquency in credit cards. And do you plan to have a more harsh measure to decelerate credit in these segments? Reviews of anything? Well, first of all, thank you for the question. It's a shame that you couldn't join us today. Well, I think that we go back to the previous question. I think that we've done relevant adjustments. The market as a whole is suffering. The readjustments happen across the board. This is not specific for Itaú Unibanco. But of course, what is necessary is has been done, and we've taken the necessary measures, not only in the review of the limits, but also in the adjustment of the concession. And this is what we still have opportunities. So it's important to mention that every time that you face a situation such as this, we need to separate where do we want to do the de-risking of the portfolio and where we have the opportunity to actually continue to grow and invest in the franchise. And the credit card product is very transactional of the day-to-day of the client of the with the bank. So imagine a long-lasting relationship without this product doesn't make any sense. So there are opportunities that we're still taking, but wherever necessary, the adjustments will be done. So we've seen the deceleration in the market. The feeling from the market is that they are all doing their relevant adjustment in the concession. Thank you, Milton. And with that, we will finish the Q&A session. And also we will finish our results for the third quarter earnings in 22. Milton, if you can do the closing of our earnings. Well, thank you, Renato, for conducting this. I would like to thank you all for your participation and presence here in our event. For us, it's a great pleasure to be able to share with the level of maximum transparency our agenda. We've shared information, quality, quantitative. It's always a pleasure to receive your questions. Your provocations are also welcomed. And I would like to say that we are facing scenarios that are challenging. I have to say, well, you're in the market, you know it. And the challenges up ahead, the bank will continue to operate with the cautious, with the care that is necessary, making the necessary adjustments, because our objective is to create long-term value, predictability, and sustainability. This is our agenda, and this is why we prepare ourselves and we work every day. Once again, thank you very much for your presence. Thank you for all the comments, and to say on our side, we are very humble, we are very respectful, we are down to earth, not only with our competition, but also the market as a whole, and we will continue to play our role, working hard with a lot of passion for what we do. Thank you very much, and we will see each other soon. Thank you.